Hi, this is Ed Fulbright, CPA, PFS. I'm with Fulbright Financial Consulting. Look forward to talking to you in a few minutes. The unemployment rate dropped sharply to 4.6%, and 178,000 new jobs were created as the economy settled into a virtuous cycle in November. A virtuous cycle is the exact opposite of a vicious cycle. That causes the Great Recession of 2008, when the housing bubble of 2006 begot the debt crisis of 2007. Now a chain of good economic news is triggering more good news. The sharp drop in the unemployment rate in November from 4.9 to 4.6 is close to the low in the unemployment last seen a decade ago. And that was at a peak of the last economic boom. Newly released data shows that the business investment, one of the four components of U.S. gross domestic products, shot up last quarter. For the first time in 5 quarters, business investment contributed to GDP growth. An inventory correction is behind us now, and business at long last replenished inventories. But this is really good news in this group of charts over here. Consumer spending, which accounts for 70% of the U.S. economic growth and is by far the most important of the 4 components of GDP growth, is poised to drive strong growth in the months ahead. The new GDP data reflects all the good news. The black bars show the growth rate of the U.S. economy economic quarter by quarter for the last 20 years through the third quarter of 2016. The red bar shows the consensus forecast of the 70 economists interviewed in early November by the Wall Street Journal. The final growth rate of 3.2%, just reported by the government, is a big revision and was bigger than expected. And 2.3% through the third quarter of 2017 is a good expected rate of growth. How long can the Fed keep this cycle of virtuous circle in equilibrium? Fed Chair Janet Yellen has signaled for months her intention to tap the brakes on the economy by raising rates a quarter of a point in December, and the strong jobs number reported on Friday makes it more likely the much-anticipated rate hike will indeed happen by the end of 2016. Given the low inflation figures, Ms. Yellen can afford to let the economy ride at the pace it's been for longer, and another rate hike may be many months away, which is good news. On the week, all the good economic news was released, and Standard & Poor's stock fell 1%, hinting the folly of the short-term price movement. Trading at 18 times the 12-month earnings, the price of shares of America's 500 largest publicly owned companies is in line with historical norms. The bull market is old by historical standards, and a drop in stock prices could come at any time in the event of a sudden change of sentiment or expected bad news or unexpected bad news. But the economy is growing, and key economic indicator benchmarks are not exhibiting any of the signs normally preceding a recession. With all the concern recently about fake news, we're committed to always being a trusted source of breaking news and analysis about the economy and financial events. Our reports are based upon economic fundamentals and authoritative data sources, though difficult periods as well as good times. Please feel free to share our timely weekly research with your family and friends. Please contact us with any questions or to set up a meeting, and don't hesitate to share this video with people who might benefit from our work.